Ladies and gentlemen, the stock market has recovered and more or less returning to a path of a bull run. Now, is this going to last? Why is it going up right now? And today I will attempt to cover all this with you. So let's just watch on so that you understand whether this will sustain to the end of the year and next year. So for the last few weeks, most of us will realize that the stock market went for a volatility mood swing. And there are many days it just went all the way down, 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 down. Occasionally go up, then it go down. And within a day, it could go up and down, up and down, up and down. So right now is poised to go towards the all-time high again. So is the worst over? Is it time for the bull run to return? So let's just watch on, shall we? As usual, this is a normal disclaimer that this is not financial advice, not telling you to buy or sell, just for education and entertainment. So the bull run has restarted. And there are a few reasons why. Number one is Federal Reserve is right now signaling a dovish pivot, and possibly there could be a December rate cut. And right now, we're looking at a 85% possibility. And also, Q4 momentum is usually quite good for stock market. And a lot of the underperforming fund managers are now chasing the market to drive the market up. So all these are contributing towards the bull market right now. So just to deep dive, this is the CME Fed Watch graph. It actually gives a prediction of what the interest rate would be by the Federal Reserve. And right now they are pricing in an 85% for a December rate cut. And to be frank, this CME Fed Watch has been pretty true, pretty accurate as a predictor. So this clearly signals that interest rate cuts are probably imminent in December, and interest rate cut is always good for a stock market. In fact, even more powerful as a driver of short-term market movements than AI news and whatever. So this is a good news. So why is there such a high 85%? Because just a few weeks ago, it dropped to 40, 50%, and it was quite sad for a lot of people. Well, that's largely because there's a lot of Federal Reserve officials, especially those in the FOMC committee, are signaling that a rate cut, I think it's imminent, and that causes the rate cut probability to go up from 30% at its lowest to 85%. So that's a huge swing, and of course that turned the whole market around. So when there's an interest rate cut, it basically means that the money that you make in future, what we call cash flow, when you bring it forward to today's terms, it becomes higher, and then you will actually amplify the entire earnings, especially forward-looking companies like high-tech companies. So interest rate cut is by far the single biggest larger driver of stock market movement up and down. So why is there such a pivot? It's largely because the members of the FOMC committee are signaling that interest rate should cut. So who are these people? Well, we have Christopher Waller. Basically, he says that inflation is close to 2% already. Labor is weakening. Cut interest rate lah. So Stephen Miran said that the policy is too restrictive, push for deeper cut. John Williams said that there's scope to lower borrowing costs. And Michelle Bauman actually said labor market is very, very fragile right now. And Philip Jefferson said that avoid over tightening risk. So all in, now we have got many members going out and signal that looks like an interest rate cut is imminent. So I think if all of them vote for, then even Federal Reserve Chairman Jerome Powell cannot overturn the whole committee easily. Talking about Federal Reserve Chairman, so Federal Reserve Chairman Jerome Powell, the current office holder, is going to come to an end somewhere around June 2026. So there are a few contenders for the new Federal Reserve chairman position. The leading one is this gentleman called Kevin Hassett, and he's actually very close to Trump. He's in line with Trump's thinking, and he's basically saying that interest rate cut has been a bit late, a little bit late, right? So he's criticizing the existing Federal Reserve for being too slow in cutting interest rate. So he's more a dovish chairman, right? Dovish interest rate. He's very market friendly, and that's a good sign. So the 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 overall position is that if the Federal Reserve chairman is not as kiasi, like scared of dying or fearful as Jerome Powell, then I think it's he's gonna be very liberal with his interest rate policy, and uh, and liberal Federal Reserve chairman is always the best for stock market. So that is why it's potentially uh, going to drive the December rally that the market are predicting. Now, many of you know Tom Lee that I've been a big fan of. He's one of the best analysts of the stock market and one of the best predictor as well. He basically said there are four pillars of the rally. Right now, seasonal trend is that things are getting positive, and the Federal Reserve is doing a dovish pivot, as I said earlier, and the 80% of the fund managers are below their target, and they have got 1 month and 1 week to catch up. So they're gonna drive the market up, and in a sense coerce into a buying position, and that could drive the market up. And the fundamentals looks good, nothing shockish. AI The AI bubble has been let off some steam already, now can come back. So I think the market looks good and bright moving forward. So Tom Lee actually said that this bull run is different. Okay, I'm quite scared when people say that, but he says that in 1 year, 2025, we have got tariff shock resolution. Then there was a bear market. Okay, it was very fast, like 1 or 2 days, and then there was a reversal and a big reset. And Federal Reserve have a pivot of their policy, and liquidity cycles are now reigniting again. So he actually said that 2026 could mirror the volatility of 2025, and he thinks that there could be a policy shock of some form, and then after that the market will go back to the bullish trend. So he basically thinks that there could be a crash of 20% that's coming, and then it recovers again. Now we don't know if that is going to be true or not, but this is something that you could just take a position on. I actually think that this kind of prediction is very difficult to tell. So what should we expect moving forward all the way to end of the year, right? So I think that volatility has already taken a breather, so I don't think it's a big issue. The December momentum is likely going to be strong, and the mega cap, Nvidia, Google, and by the way, Google came out with some super chip that could challenge Nvidia. So this mega cap leadership right now is driving the whole market up on the AI front, and the rest of the market are driving along as well. So I think that it's just good signals ahead. So my key takeaway is this: the key thing is not the AI story, it's interest rate. If interest rate were to cut, wow, lo and behold, man, there's good days ahead, right? So December is the one that we're all looking towards, right? Interest rate cut, good. No interest rate cut, no good. As simple as that. But in the mid to long term, AI remains to be the big story. AI remains to be king. And I think the AI revolution or the AI uplift is going to continue to drive. So I would continue to stay invested as I always have. So and in the market, people are forced to take some positions. I don't need to follow market trends when it go up and down. I just stay invested. So in a nutshell, I do think that the bull run has resumed and it's going to charge up. The extreme volatility that we see in early part of November, I think those are over. And for those people who think that I keep flip-flopping, I don't, right? The market will flip-flop. I've always stayed consistent, right? A very powerful and strong financial safety net in the CPF, okay? And on top of that, invest in globally diversified portfolios, S&P 500, NASDAQ, MSCI World Index, Dimensional Fund, whatever. I just spread them all out and when market goes up, charge in huge profits, I take rebalancing positions into uncorrelated asset. But I literally just stay invested and let it just compound. This formula has made me a hell of money. And you know what? I've also got a lot of feedback from our community members that they have made a lot of people a lot of money. So I think that's all good. But the market is something that we cannot be 100% sure. So let's just watch and see whether this is something that would come to pass. And may you all do well in your personal financial journey. And I'll see you in the live stream. Bye bye.